Bismillahirrahmanirrahim. Assalamu alaikum. I am Syed Akif Shah, lecturer finance at Institute of Business Studies, Kohat University of Science and Technology. The title of this course is Business Finance and the course code of this subject is BS 151. This is lecture number 11 and the topic for today's discussion is time value of money, under which we will be discussing annuities. Outline of this lecture comprises of annuities and their types, and number second, example of annuities in finance. So after listening to this lecture, you should be able to understand what is meant by annuity, number one. Second, understand the different types of annuities. And third, understand the practical examples. First point agenda, the type of annuities. Let's start with the definition of annuity. An annuity represents a series of equal payments or receipts occurring over a specified number of equidistant periods. Now, what does this definition means? We need to bifurcate it and divide it into many components. First of all, an annuity, it is an investment opportunity, represents a series of equal payments or receipts. So it could be payment or it could be receipts. If taken into the consideration, if you are an investor, then you might be investing certain amount of dollars in a bank account that is supposed to pay you certain number of dollars after a specific time period that is occurring over a specified number of equidistant payment. So there are 3 or 4 main points which need to be considered while explaining annuities. Number one, it is a series of equal payments or receipts. Suppose if you have taken a bank loan from any banking organization and then that banks ask you to pay out that loan in 10 years, so that specific series of equal payment will be considered as an annuity. While if you are an investor and you have put certain number of dollars in that bank account and that bank is going to pay you out certain number of dollars as interest or profit, then that annuity will be considered as receipts. Because let's suppose you have invested $100,000 in a bank account, $100,000, and this bank A is supposed to pay you out $100,000 at the end of each year for the next 10 years. Then this $1,000 at the end of each financial or accounting period will be known as an annuity because it is equidistant payment by the bank to the investor. So now I hope that annuity concept has been clear to the students. So let's discuss the types of annuity. There are basically 2 types of annuity. Number one is ordinary annuity and the other one is known as annuity due. Now what is ordinary annuity? An ordinary annuity means payments or receipts occurring at the end of each period. Now let's take the previous example of Bank A, in which the bank was supposed to pay you out $100,000 at the end of each accounting period or financial year. Then this kind of annuity will be considered as an ordinary annuity because the bank is paying you out $1,000 at the end of each year for the next 10 years. So this will be considered as ordinary annuity according to the perspective of bank, because the bank is paying you out this ordinary annuity. However, according to the investor point of view, this is an annuity receipts because you are going to receive this $1,000 upon the investment of $100,000 in this bank A. Now, what is annuity due? Payments are receipts occurring at the beginning of each accounting period or the time period which has been decided between bank and the investor. So what does this mean? It means that there are certain depository institutions which are offering you annuity due option. Now, according to the time value of money, the dollar an investor gets today worth more than the dollar he or she is going to receive tomorrow. So therefore, another bank, which is known as Bank B, why one should invest $100,000 in this Bank A? Because this Bank A is offering you ordinary annuity option. Why not to go with the Bank B, which is offering you annuity due? Now, what is the competitive edge of annuity due over ordinary annuity is that, let's say in 2011, you are going to invest this $100,000 either in Bank A or in Bank B. Bank B is offering you annuity due. What is the competitive edge if you are going to invest your money in Bank B? That could be that if you have put this $100,000 in Bank B, it is going to pay you out this $1,000 return or profit at the beginning of each period. It means that the moment in 2011, let's suppose the month is January, and you have put your money, which is $100,000 in this bank account, then this Bank B is offering you $100,000 profit or interest to be credited into your account the same day. So it means that the annuity due is the payments or receipts occurring at the beginning of each period. So definitely, what will be your choice? Either go for Bank A or Bank B. According to the time value of money phenomena, the dollars you are receiving today are worth more than the dollar you are receiving tomorrow. So therefore, your decision would have been to opt for Bank B and put your money in annuity due rather than to put your money in ordinary annuity. Examples of annuities. It could be student loan payment. Let's suppose student has taken certain number of dollars or rupees from a bank account, and that bank is asking the student to pay out that loan in 5 years of monthly installment. 5 years of monthly installment, that is 60 monthly payments to the bank to return its loan obligation after getting employed and after getting your degree complete. You have been employed by certain organization, and then certain amount of dollars would have been deducted to pay out this loan obligation for the next 60 months. It means that it will be the annuity payment to the bank, and since it is equidistant payment, that is, you are supposed to pay out your debt obligation for the next 60 months, which are equidistant, and it usually it is the same dollar amount to be paid out equally after getting this loan, and you are supposed to pay out this loan obligation to the bank. So you are required to pay out the same number of dollars each month. The other example of the annuity could be a car loan payment, insurance premiums, mortgage payments, and the retirement saving. Like for example, somebody has taken a car loan from a bank, which could be, let's say, HBL. Somebody has taken a loan from HBL to purchase a new car. Which he or she is obliged to pay out to the bank in 5 years. and monthly installments, which will be 60 monthly payments to be paid out to the HPL bank because he or she has taken a bank loan from that HBL, and HBL has divided this loan principal amount into the 60 equidistant payment, which includes principal and certain number of dollars as interest receipts. So this could be the annuity receipts with the perspective of HBL. However, it will be the annuity payments with respect to the borrower. Now let's take another example, which could be the insurance premium. Usually people go to the insurance company, or the insurance company agents approaches the business personnel and as well as employees working in a different organization, and they offer you different insurance policy like life insurance, health insurance, or even your newly bought car insurance, accidental insurance for a certain number of years, which could be once again for 5 years you are going to take your insurance policy for your newly purchased car. So in this case, as an policy taker, you are required to pay out monthly installment, monthly premium rather than I must use, because in the insurance company, when somebody has taken an insurance policy, he or she is required to pay out monthly premiums to the insurance company, so that in future, if let's suppose car got accident, then the insurance company pay you out the damages. So in 5 years, the car owner is required to pay out certain number of dollars as monthly premium to the insurance company, so that in future, if God forbid car got accident, then the insurance company will bear out those damages. So in this case, the payment you are paying to the insurance company in monthly premium will be known as annuity payments with respect to the policy taker. However, according to the insurance company point of view, the company is receiving the annuities, therefore it will be the annuity receipts. If let's suppose the company is asking you to pay out this monthly premium amount at the start of each month, then it will be considered as annuity due. However, if the insurance company is asking you to pay out your monthly insurance premium at the end of each month, then it would be considered as ordinary annuity. In the next example, we can take out this mortgage payment. Let's suppose, what is this mortgage payment? Let's suppose for home construction or house construction, an individual has borrowed certain amount of dollar from Habib Bank Limited, HBL, and he is required to pay out that loan amount in 5 years of monthly installment, which consists of not only the premium, not only the principal amount, but as well as the interest to be charged by the bank. So this, let's suppose this amount come up with $500 as monthly payment, or $50,000 rather than I must say 50,000 rupees, because Habib Bank is a Pakistani bank, so we use usually rupees over here. The person is required to pay out this $50,000 rupees to Habib Bank in monthly installment, which consists of certain number of rupees, which could be, let's suppose, 40,000 rupees as principal amount, and the remaining 10,000 rupees as interest payment to the bank. However, it is in a lump sum, the person is paying 50,000 rupees as their house building loan payment to the bank in return of the what he or she has received previously from the bank as loan amount, and this same amount what he or she is obliged to pay to the Habib Bank. If the person is paying out at the beginning of each month, then it will be considered as annuity due with respect to or from the perspective of Habib Bank. However, if the person is required to pay out this $50,000 or rupees at the end of each month, then it will be considered as ordinary annuity. Finally, we can have a retirement saving scheme. where private employees usually, what do they do? Different bank, like let's take an example, another bank, ABL, which is offering retirement saving plan to the people who are working in private organization. So in this case, ABL is asking the private employees to contribute certain amount from their salary each month for the next 15 years in a particular retirement saving plan. Then it will be considered as ordinary annuity from the ordinary annuity payments from the perspective of ABL. However, from the employee's perspective, it will be considered as ordinary annuity payments. It will be considered ordinary annuity payments from the perspective of employees. And from the ABL perspective, because ABL is receiving certain amount from monthly salary for the next 15 years, from ABL perspective, it will be considered as annuity receipts. Finally, how to solve these kind of annuity problems. There are certain steps to solve time value of money problem which are having these annuity cases and numerical values. So what could be those steps? Number one, read the problem thoroughly. Number two, create a timeline, that is for how many years or time periods this person is required to pay or receive the amounts. Third, put the cash flows and arrowheads on the timeline. Determine if it is present value or future value problem. In a journal hint, if the narration consists of a particular word which is explaining that this amount will compound to this for 1, 2, or 3 years, then it will be a future value question. However, if the narration consists of discount this value for 2 or 3 years, then it will be a present value question. So you need to determine if the question is asking you to find out the present value or future value. Fifth, if the solution involves a single cash flows, as we have previously discussed in the last 2 lectures over time value of money, it could be an annuity stream like the one we have discussed in today's lecture, or it could be a mixed flow, that is in the first year the amount could be like 500. End of second year, let's say an investment could provide you $600, and at the end of third year it could provide you $700. So such kind of question are cash flows which are different from the previous one, are known as mixed cash flow questions. Last but not the least, after understanding 1 to 5 points clearly, after reading carefully the question, you can solve the problem. Another way around, finally, after solving the problem, you can check out your answer with the help of a financial calculator which are available in the market. You can purchase it and simply put your initial cash flows and initial cash outflows and the cash flow streams you are receiving over a number of years from any investment opportunity, and then simply with the help of just single touch of the button you can get the answer of present value or future value phenomena, which we will discuss this financial calculator calculation in our next lecture. Thank you very much for listening to this lecture. If you have any question, feel free to post on KCMS and I'll try my best to answer your question. Thank you very much for listening. Good luck for the day. Allah Hafiz.